What is inflation? Inflation is not the value of an apple, which is much more today than it was 10 years ago. The value of an apple is an apple. It doesn't vary so much. The value of apple is not varying. In fact, what is varying, it's the value of the currency you're measuring.
Yves, it's brilliant to have you on the podcast. How are you doing?
Very well. Hi, Jordan.
Yeah, great to have you. And we were just laughing there about we had a call, I want to say 4 years ago, and it was before we did the Edinburgh Bitcoin conference in 2022. And we had a call, I want to say 2021. And what I remember from that call is we were talking about Tobam, and then I found out that Tobam actually means think out of the box asset management. And I just remember that's always stuck in my brain from that conversation that we had.
That's the only thing you remember?
It was a long time ago.
How long was the conversation?
I think it was 30 minutes.
30 minutes, and everything you remember is that Tobam stands for Think Out of the Box Asset Management. Okay. Okay.
No, it was a brilliant conversation.
Why our name is Tobam? Why did we choose that name? In fact, we are an asset management company. About 65% of our clients are entities that are related to governments, so central banks, sovereign wealth funds, and public pensions. And about 60% of our clients are from North America, Canada and the US. So very often we meet with clients, and in fact, one of our competitors would be typically BlackRock. And we realized very early it didn't make sense to meet with a client and to say, we do the same thing as BlackRock in a better fashion. We decided to do what BlackRock is not doing yet. And this is really the mission statement of Tobam. It's to provide exposures not yet offered by reference players. So by definition, in fact, what we do is to try to be out of the box, because if people are already there, if the BlackRocks of this planet are already there, we will not try to compete with them. We don't like to be in what is called the red ocean. We are in the blue ocean. And we try to come up with out-of-the-box ideas in order to provide our clients with exposures the others are not yet providing them with. Typically, we launched in 2017 what I believe is the first open-ended fund invested in Bitcoin in the world. And here we were 7 years ahead of BlackRock. We invented Smart Beta. We co-invented Smart Beta in 2005. And here we were about 10 years ahead of the reference players. And this is what we try to do. We try to come up with new exposures, out-of-the-box exposures. And this is how we have chosen this name.
There's such a brilliant name. How did you come across Bitcoin? And how did it come on your radar to then bringing it into Tobam and launching the fund?
Well, in fact, it's a story that began in 2013. And to be frank and sincere with you, I don't recall how. But I read an article, and it was, I think, just before a roadshow to the US. And I stored this article somewhere, and I saying, I need to read that. And I read it a few months later. And I got interested. I'm a mathematician by background, and most of us here at Tobam are mathematicians. And in my mind, at that time in 2013, it was a mathematical object, a mathematical gadget. It was something very funny. It was a solution to a well-known problem. And the Byzantine general problem. And we looked at it. I looked at it from a mathematical point of view. And Jen, I wanted to check it, the same way that when we were youngster, we used to take radio sets and dismantle the radio set to check how it works. And one day I bought some Bitcoins just to check how it works. And once I was in the elevator checking the price of the Bitcoin, and one of my colleagues came in the elevator and told me, you're checking the price of the Bitcoin, do you have Bitcoins? I told him, yes, do you have Bitcoins? And we realized that day that 4 of us at Tobam, in 2013, we were probably something like 15 people, and 4 of us, we had Bitcoins. But just as a game, a gadget. And at that time, it was very difficult to get, information about this thing. At that time, there was only one very significant, exchange. Its name was BlackRock. So it was really prehistoric times. And we decided at that time that in order to share information amongst us, we would organize a monthly dinner and invite all of the guys at Tobam that would be interested to discuss this subject. And because we try to be provocators at Tobam, the dinner would systematically take place in a pizzeria, because there is some kind of a specific relationship between pizzas and Bitcoiners. In order to be a real Bitcoiners, you need to love pizzas. You share this opinion?
Yes, and celebrate pizza.
Celebrate pizza once a day, once a year, sorry. So it's during one of those meetings in 2016 that I told my colleagues, guys, maybe this is not a gadget. Maybe you can do something with the radio set other than dismantle it to check how it works. Maybe you can, enjoy the radio set in a different fashion. And I told the guys we are going to implement the bet. And we tried to work on a one-pager that describes the bet. And because I am a disciple of William of Ockham, do you know William of Ockham?
No, I don't.
William of Ockham is a 15th century philosopher who invented a very, very useful tool called Occam's razor. Heard of Occam's razor? Not?
No, I haven't.
The idea it is that you should always simplify problems and try to simplify solutions. I make it short. And the idea it is that we took this one pager and we try to simplify it, to the Occam's razor, and try to simplify it, to make it shorter, to make it simpler. At the end, we ended up with only one sentence describing what we were going to bet on. And the sentence was, one day or another, the largest asset managers in the world will propose fund invested in Bitcoins to their clients. This is a sentence we wrote in 2016, and we won this bet, and as you very well know, in 2024. And we thought about how to implement this bet. If I have the speculation, the vision, that later on, the largest asset managers in the world are going to propose Bitcoins to their client, how should I implement this bet? And we decided to implement this bet 2 ways. We decided to buy Bitcoins, and we decided everywhere, in all the holding companies, voilà. And we decided to create a research team dedicated to Bitcoin. And the first job I gave this research team was to write an investment thesis on the Bitcoin. I am a professional investor. I am not a tech guy. I am not an economist. I am interested into only the investment thesis of things. And this thing was missing. There was not a clear description of the investment thesis of a serious professional investor who would buy Bitcoins. What is his thesis? And we ended up writing a much longer than one sentence paper, a 90-page paper, describing exactly what is it and that you are buying when you're buying Bitcoin from an investment point of view. So we took this paper, we presented this paper to the French regulator, and the French regulator told us, why don't you launch a fund invested in Bitcoin? I told them, of course, we are running mandates on Bitcoin already, but we thought about launching a fund, and the regulation does not allow us to launch a fund invested in Bitcoin because there is this article in the regulation that prevents us. And the regulator told us, okay, you've read the right article, but there is another article. And if you use this article, maybe you could launch it. We were surprised. And we returned to the office. And 2 weeks later, I called the regulator. I told them, yes, you have solved the problem. But there is another problem because there is also this article here. And they told us, you're right. But there is also that article here. And after exactly 4 exchanges between the French regulator and us, we were able to launch in November 2017 the first open-ended fund invested in Bitcoin in the world. So our track record is the longest in the world. It exhibits a correlation of 0.99% to the Bitcoin. So it's very, very much replicating the Bitcoin in a securities format. We have done, in fact, exactly what BlackRock has done last year, but we were 7 years ahead of them. And this is how it really started. Then we took some other initiatives, but maybe you will give me some opportunities to elaborate on those initiatives later on in the interview.
I will indeed. Very exciting.
But learn one thing, whenever you will ask me a question, I usually answer very long. I will provide you with very long answers.
It makes my life easy.
Okay. Perfect in that case. Okay, sorry.
How did you, so launching, there's an echo, sorry, I just need to, there we go, that should be better. Yeah, in 2017, how did you go about, you'd obviously understood Bitcoin, the thesis of Bitcoin. How did you go about educating others around, in traditional finance, what Bitcoin actually is? Because even nowadays, that's still, it's getting a lot easier, but in 2017, I can only imagine.
You're absolutely right, Jordan. This is really a real challenge, a real concern we should all have. And the way we adopted very early is quite original, I think. It's quite out of the box when compared to the usual presentations of Bitcoins I have seen. You know, imagine I asked you, Jordan, what is a car? There are 2 ways to answer this question. The first way consists into saying, let me explain to you the second law of thermodynamics. And because there are no cars without the third law of thermodynamics. But if I explain to you the second law, probably it will take me about a year to arrive to the description of a car. And it is the same problem with the Bitcoin. The mistake is to explain the blockchain. You don't explain a car by explaining the way an engine works. You explain a car by saying it's a box with 4 wheels, a 5th wheel, an accelerator, a brake, an engine, and a tank, and you will know I'm talking about a car. And before the car, this box did not exist. So I'm really defining what is a car. The Bitcoin is exactly the financial asset which is the most easy to explain in the world. You need to understand 5 words. In order to understand the Bitcoin, you need to understand 5 words. The first 3 words are common between the Bitcoin, the euro, and the dollar, and the pound, and the yen, and the Swiss franc. And the second, the two others, the 2 last ones, are what makes the Bitcoin specific. The first word that describes Bitcoin, it is to say that Bitcoin is digital. The same way that the euro, most of the euro, the immense majority of euros and dollars and yens and Swiss francs and pounds, sterling pounds, are digital. Okay? They are not banknotes. They are, in fact, some figures in a ledger. And this is what Bitcoin is. It's digital, the same way that dollar is digital. The second word that defines Bitcoin, it is to say that Bitcoin is solid. The same way that the yen, the dollar, and the euro are very difficult to forge, the Bitcoin, in fact, is unforgeable. Now, it's immensely complicated to forge a dollar. It's much, much more difficult to forge the Bitcoin. So it's solid. The third word is peer-to-peer. Now, I can give you some dollars without an intermediary. I can send you some Bitcoins, or not some, because it would be a lot of money. I don't want you to have,
I'll accept
expectations. No, you owe me money. We will start that before the meeting. Okay. If I wanted to send you some Satoshis, I don't need an intermediary. It's peer-to-peer. And those are the three first words that are common amongst the euro, the dollar, and the Bitcoin. The first word is very important. It's decentralized governance. Bitcoin is not decentralized, doesn't mean anything. It's governance, which is decentralized. And this is very different between the Bitcoin and the ECB. Let me give you the example of the ECB. The European Central Bank, when it was founded, they discussed the mission statement of the ECB. And the mission statement was one sentence: price stability. The problem with the ECB is that the governance of the ECB is centralized, which means that there is a board. And the board met. And they decided to say, okay, we want price stability, therefore we want stable inflation. Come on, guys. Come on, guys. Stable inflation different from zero and price stability? It doesn't make sense. It's not that it doesn't work, it doesn't make sense. How can you have inflation of 2% and have price stability? First example. Second example. In the bylaws of the ECB, it's written, the ECB will never lend money to Euroland governments. And now the balance sheet of the ECB is full of Euroland government treasury bonds.
And that was written originally.
Absolutely, it's still in the bylaw. They say we cannot lend, but we can buy bonds. Can you imagine? We are not borrowing; we are simply buying bonds. The bylaws of the Bitcoin is what? It's an algorithm, and this algorithm is stored in tens of thousands of network nodes. Myself, I own 2 nodes. Yourself, if you want to buy a node, if you don't own one, you just go on the internet. It will cost you about 500 euros, $500, 500 pounds, and you will have a node. And as soon as the node needs to be changed, everybody needs to approve if the X algorithm, if the new algorithm is not compatible with the old algorithm, you will need to accept the change. And if one of us will refuse, the algorithm is not going to change. You will need a fork, and it's a different story, which means that the other network, the previous network, will survive. Okay? So which means that this is a virtue of decentralized governance. It is that when the Bitcoin gives you a promise, the promise will be kept. And the fifth word that described, you remember, we said digital, we said solid, peer-to-peers, decentralized governance, and last word is, it's a figure, it's 21 million. There will never be more than 21 million Bitcoin. There is potentially an infinity of euros and dollars. And this is, with those 5 words, if you understand those 5 words, you have in fact understood what the Bitcoin is. And this is what we need to tell people. We don't need to explain to them the blockchain. The same way that when you buy or use a car, you don't need to really understand how an engine works. You can, elaborate on how an engine works, how the AC of the car works, but it's a different story. You don't need that to understand what a car is perfectly. And you don't need much more than the 5 words I gave you in order to understand perfectly what is a Bitcoin. And in fact, the originality of our approach is that we approach Bitcoin from an investment point of view. And from investment point of view, the value proposal of the Bitcoin is completely contained in those 5 words. Because the Bitcoin is the first object invented by human beings that is fully described and is uniquely described by those 5 words. Sorry for the long answer, but I have decided to make your life extremely easy, in fact.
That's such a good way, because I know a lot of people struggle with communicating Bitcoin. And a lot of people get very excited as well and then confuse themselves when they're talking about Bitcoin.
Now, if you want to explain the blockchain, there are easy ways to explain blockchain. If you want to explain what is mining, there are easy ways to explain mining. But the idea is never to go to the technology. You want to explain why do we need the blockchain in order to fulfill why do we need the miners? Miners, what are the miners? Miners is not about solving problems and this kind of things. Miners, it's about renting and computation power. When you are a miner, you are lending to the network a computation power. In fact, this is what you're doing. And the more computation power there is, the more it is solid. The more, you will not have forgeable Bitcoins. The less you will have forgeable Bitcoins, the less the Bitcoin is forgeable anyway. And the miners are simply lending some computation power. And in order to attract more and more miners, Satoshi has created a lottery. Because in fact, it's a lottery. Every 10 minutes, you have a lottery draw, which gives a random miner a certain amount of Bitcoin. And this is how the miners are motivated to mine, to lend computation power. And this is how the number of Bitcoin increase every year, every 10 minutes, in fact. But the increase it's not growing, it's decreasing. It's 50 Bitcoins every 10 minutes during the first 4 years, and 25 and 12 and a half. So 50 plus 25 plus 2.5 plus this, plus, how much does it? 50% of a pizza, plus 1/4 of a pizza, plus 1/8 of a pizza, plus 1/16 of a pizza. How many pizzas you will have at the end? You will have one pizza. So 50 plus 25 plus etc. is 100. How many times do you have 10 minutes between each halving? How many times do you have 10 minutes in 4 years? You have 210,000 times 10 minutes every 4 years. 210,000 multiplied by 100 just gives you 21 million. And this is how you arrive to the 21 million. The day I discovered the 21 million, I discovered it alone. Because I told you in the beginning it was a gadget. So I looked at the algorithm, and one night I realized suddenly, but this means that there is a limitation to the number of Bitcoin. Because I thought it was going on forever. No, it's not going on forever. It converges. So I came the next morning to Tobam and I told the guy, guys, there's only 21 million of them. And 2 of them told me, oh, come on. And the 2 others told me, yes, we know. So at that time, it was prehistoric times. And not everybody knew how to, start a fire. And we discovered that it works. And I was really impressed. This is a moment, the Eureka moment for me was the day I discovered the 21 million, because I thought this guy invented, you know what he invented? He invented money. He invented the first proposal of real money. All of the rest is fake. Gold is fake. There is an infinity of gold across the universe. You can create an infinity of dollars, of euros, the first currency of mankind was probably the stone arrowheads. You can create an infinity of them. And this guy, he's proposing us a new currency with a absolutely known and limited supply. And nobody else before him did it. So when I was young, I used to be to give some, I was a professor. I gave some conferences at university and used to say the best currency of the world is the Mona Lisa. You take Mona Lisa and you cut small squares in it and you distribute that, and those are the currency. And suddenly I realized, he did it. He did it. And many years later, I discovered this book. This book is written by Friedrich Hayek. I'm going to show you the French title of the book, but the English title is different. It's Denationalization of Money. And I read this book many years after I discovered Bitcoin. And every page I was turning, I realized, shit, he's describing Bitcoin. The French name is even more interesting than the second name. First of all, you discover the English name, denationalization of money. And you say, okay, maybe money should not be run by a country. Maybe money should be inert. And then you read the French title, and the French title is for a real competition across currencies. And a couple of years ago, I discovered what are the currencies that are going to compete. You know what are the currencies that are going to compete?
What?
Bitcoin is not the future currency of the world.
Okay.
Future currency of the world is tokens that are going to be issued by companies, by organizations that own the reserve asset. So MicroStrategy is going to one day or another issue plenty of tokens. The blockchain group is going to issue tokens. And those tokens will be pegged to the reserve. In fact, you've heard of a company called MicroStrategy, I guess. You may have heard. And in fact, what is very interesting, it is that the model of MicroStrategy is absolutely not new. In the beginning of the 19th and the end of the 18th century, there were companies in the UK or in France. They used to issue shares in order to, buy more and more gold. One of those companies was known as the Bank of England, and the other was known as Banque de France. And in fact, they were, buying gold, increasing the amount of gold, and they were issuing bonds, tokens, issuing banknotes, tokens, not digital tokens at that time, but typically a banknote is a token. A $100 bill, banknote, a 100 euro banknote, it's a token. And behind the token at that time, there was gold. So I wonder whether if I wanted to simplify everything to be Occamian, and I was an author of science fiction, I would not read again this book and say, in fact, what Friedrich Hayek is Nobel Prize of Economy. He wrote his book in 1976, so much before Bitcoin. In fact, the perfect competition he is describing in my mind is a competition between entities that own a lot of Bitcoins. And because Bitcoin is not extremely practical, transactions are confirmed every 10 minutes. You cannot have an infinity of transaction every 10 minutes. You will need an overlay. It could be Lightning. One way would be for, MicroStrategy to have a gigantic Lightning account. But it could be tokens as well. Tokens that you can trade on, on a very sophisticated, blockchain, which offers more fragility than Bitcoin, but is suitable for other usage than Bitcoin. So a possibility, a speculation, it is that those companies that are amassing gigantic amounts of an asset which is ridiculously cheap today. It's incredibly cheap. There are 21 million Bitcoins. There is 100 million millionaires in the planet. Which means that those millionaires, if they all want Bitcoin, they are going to fight. On which field do you think they will fight? They will fight on only one field, price. So the price of the Bitcoin is ridiculously cheap. The Bitcoin is also very risky, very volatile. Which means that we are exposed, you, Jordan, and me today, living in June 2025, to a dilemma. Which is that either we buy Bitcoin today when it's very cheap but extremely volatile, or we wait until it is less volatile, but that day it's going to be much, much more expensive. And there is some kind of a very, in fact, scientific relationship between price and volatility. There is a relationship between what I call the 4 parameters of Bitcoin. The 4 parameters of Bitcoin, it is that Bitcoin has a price, it has a volatility, it has a correlation to other assets, and it has something which is very important in an asset with limited supply. It has adoption. It's not about the fact it's rare. It's also about the fact it's adopted or not. Let me give you a very simple example. You've heard of Picasso.
Yeah.
People will tell you the price of a Picasso is very expensive because it's rare. Let me tell you a painter which is even more rare than Picasso, myself. I have only 1 or 2, drawings and maybe 1.5 paintings. But my price is much cheaper. One, because nobody is adopting me. It's a question of adoption. It's not only scarcity. It's scarcity and adoption. Okay, so let's discuss about those 4 parameters. Price is, of course, connected to adoption because there is only 21 million Bitcoin. If everybody wants Bitcoin, of course, its price has no choice but to go up. We are not going to issue. The more people are thirsty of euro, the more we issue euros. If you're thirsty of Bitcoins, we are not going to issue more Bitcoins. They are all mined, virtually all mined already. Okay. So there is a connection between adoption and price. The second parameter is volatility. Why is Bitcoin volatile? Because I can tell you from now that 20 years from now, either the price of a Bitcoin will be below $100 a Bitcoin, or it will be probably, very probably, above $5 million a Bitcoin. And it is the confrontation between those two scenarios that crystallizes into volatility. The day the probability of zero, of a price of zero, lowers, which is already the case. I remember very well a girl called Christine Lagarde. Have you heard of Christine Lagarde?
Yes, I have.
It's a lawyer. It's a famous lawyer who happens to be the chairman of the European Central Bank. They've chosen a lawyer. How come? Nobody knows. It's a mystery. She's very good at law, but she never learned anything about economics. But never mind. She's probably extremely skilled. Christine Lagarde used to say, Bitcoin is going, its price is going to zero. I am not hearing this sentence anymore. Which means that even herself, she understands that it's less and less likely that the price is going to zero. And the less this, it's like Google in 1996. 1996, nobody knows how to price a startup. It's very volatile. And Bitcoin is in a way some kind of advanced startup. And maybe its price will be zero, maybe it will be trillions of dollars. And it's a confrontation between those two scenarios that makes up volatility. So you have adoption and volatility. The more it's adopted, the lower the volatility you see. Adoption will decrease volatility, adoption will increase prices. And this is a dilemma. Now, the last parameter is correlation. Bitcoin is not significantly correlated to any other asset today. If you look at things from a statistical point of view, at the significance of correlation, you will see that it's not significantly correlated to anything. This is for today. In the future, it will be the same because either the Bitcoin will fail. If it fails alone. It's not going to be correlated. If it is successful, it's going to be some kind of a shelter. When do you need the shelter? When it's rainy outside. When do you escape the shelter? When it's sunny outside. So Bitcoin is, in a way, doomed to be uncorrelated, unsignificantly correlated to anything else. Now, of course, if you measure the price of Bitcoin in euro or in dollar, you have an inverse correlation, which means that more euro is abundant, the more the dollar is abundant, the more the price of Bitcoin is high. But it's not the price of the Bitcoin that is going up. It's the value of the dollar and the euro, which is, converging to its final fate.
This is such a... it's such a simple and basic of understanding is the value of fiat currencies are going down as they get diluted.
Yeah, what is inflation? Inflation is not the value of an apple, which is much more today than it was 10 years ago. The value is of an apple is an apple. It doesn't vary so much. The value of apple is not varying. In fact, what is varying, it's the value of the currency you're measuring. I could be taller and taller. If the length of a meter was smaller and smaller, I would be taller and taller.
Oh, that's such a good way of putting it.
I'm happy. I'm trying to lose weight. I could be more and more skinny. If my kilograms were increasing in value, I would be more and more skinny and more tall.
I've never thought of that.
But I am taller.
Such a good way.
Every year I'm taller. My mother is so satisfied. She is less and less tall, but it's for a different reason. The meter I use, I make it shorter every year. Therefore, I'm taller.
Wow, such a good way of putting it. Wow.
Yeah, it's about standards. It's all 100%. About standards. Why do we need money? One of the most important use of money is standard of value. What is the economy? The economy is a place in which you build, you manufacture, you exchange, and you store, labor, objects, goods, services. In order to manufacture, to exchange, and to store, you need to be able to measure value. And if you need a measurement, you need a standard. Whether it's a measurement of length, a measurement of weight, a measurement of value, you need a standard. And this is why the whole history of the economy goes alongside with the history of currency. And whenever the user of currencies had in the past the impression that the currency was becoming more and more abundant, in the past we have always needed to change the standard. From the stone arrowheads to the agricultural goods. When the agricultural goods became abundant, we changed standard. And we went to iron. When iron became easier and easier to manufacture because of technology, we went to brass, we went to silver, we went to gold. And if someday the users of the dollar and euro realize that all of that is as clever as accumulating bullshit, maybe we'll need to change that.
It's when you put it so simple when you just change the standard, because we've been through so many cycles of currency.
Be Okamian, simplify. Look at the big picture.
It's brilliant. That changing height, that's got me. But yeah, moving on to how companies are now realizing what this is and implementing it into their business. So, for example, the headline news last week was Paris Saint-Germain adopting Bitcoin and putting it on their balance sheet. But there is a new type of company.
You don't want to store things that are more and more abundant. Doesn't make sense. I was in the Middle East about a month ago. I was meeting with one of the largest sovereign wealth funds in the world. And they invited me to present the Bitcoins to their investment committee. So there was a CEO, the CIO, all of them were here. And I presented a slideshow. And my last slide was a representation of a derrick. Do you know what is a derrick? It's an oil well.
Okay, no.
Like the Eiffel Tower, in Texas, you had plenty of them. It's a derrick, an oil well. It was my last slide. And I told them, let's be crazy and very imaginative. let's imagine that one day we discover oil in Abu Dhabi. Let's be crazy. Let's make this effort of imagination that we discover oil one day in Abu Dhabi. I told them, maybe you read the newspapers and maybe you're aware that oil is rare and useful. If you discovered oil in Abu Dhabi, I guess you would not exchange something which is rare and useful against banknotes that somebody on the other side of the planet can print infinitely without any cost. It would be crazy. Now, imagine worse than that. Imagine you sell your oil and you buy treasury bonds. What is the only promise you're getting from the issuer of the treasury bond? The only promise he's giving you, in fact, if you think about it, it is the promise that 30 years from now, he's going to print more money. This is what you get from him. You're giving him oil today in exchange for the promise by him that he's going to issue more money 30 years from now. So I see that you are having plenty of fun, Jordan.
So, but what was the reaction to this?
They were like that. No words.
And then it just makes it
I
easy
am a
for
little bit
you
provocative. I am a little bit provocative. My goal is to give them very simple ideas. As you mentioned, it's very simple. It's to look at the things the way they are, in fact, and not the way we believe they are. In fact, the promise you're getting from the guy that is issuing a treasury bond and which is controlling a central bank, the only promise you're getting from him is, I am going to print more money. And that's it. And it's been like that for 100 years. And even more so since 1971. Okay.
And then it's just an easy sell of Bitcoin then, surely.
It's not an easy sell of Bitcoin. It's the idea that you realize what is a project of fiat money. It doesn't work as a store of value. You cannot store value in that because it's more and more abundant. And if you want to store something, store oil, store gold, store Bitcoin, but store Picassos, but certainly not store, and nobody does that anymore. A long time ago, the people used to store money. Nobody wants to store money because they understood it. It's fake value.
Now we're seeing companies realizing this.
Well, it's about a man needs to store value.
Exactly.
And companies for euros or dollars, they want to store something that is not more and more abundant. It doesn't make sense. So this is why Paris Saint-Germain, if I understood well their investment thesis, probably why they said, after all, why store something that we have plenty of and we'll have more and more of any case, because the issuers is pouring banknotes across the universe. It's not very interesting. Let's try to do something else.
And now we've got that new type of company, which is just focused on Bitcoin, which is Bitcoin Treasury companies, which is following Michael Saylor and MicroStrategy.
The difference between Michael Saylor and between MicroStrategy, in my mind, but very modestly, maybe he has a different opinion. The difference between MicroStrategy and Paris Saint-Germain, it is that for the time being, Paris Saint-Germain has not changed his business model.
Yeah, I'm not saying PSG are doing that. I'm moving on to the blockchain group.
Now, okay, so blockchain group or MicroStrategy, they have changed their business model. They have looked at the Bank of England and Bank of France, and they say maybe that's not a bad business model until 1971. Maybe it makes sense to be a reference player, which the ECB is not going to stay a reference player because people will realize that they are not respecting any of the articles of their bylaws. You cannot trust them. And the cornerstone of economy is trust. And we all know we cannot trust the ECB. We cannot trust Lagarde. When 3 years ago or 4 years ago, she told us there is no inflation. We don't have any sign of inflation. She was probably, those board members of the ECB, they were probably the only human beings in the Euroland that could not see it coming. Probably they were the only one. So how can you trust them? Their agenda is not to fulfill the mission statement of the ECB. Their agenda is different. They don't disclose it. You cannot trust them.
So for anyone listening then, if these Bitcoin treasury companies are going to move in to be the banks of the future, say they have their own tokens, or they're using a layer 2 like Lightning, how come? So with Lightning it's a little bit different, but if they have their own tokens, how do we know that there's not going to be a 1971 moment with these new banks?
They will compete. The way Friedrich Hayek said it, there will be a competition between different providers. Bank of England was a privately owned company. Bank of France was a privately owned bank. They will compete, and they will try to give you clues of trust. They will give you some kind of audit. They will make, today nobody can audit how much gold has the Banque de France. Nobody has any idea whether it's real gold or not. It has not been audited for I don't know how long. I don't want to say figures that are wrong, but probably it's not audited every day. Probably it's not audited every 10 minutes. Bitcoin can be audited every 10 minutes. If you are storing Bitcoin, somebody that is provided with the access can tell you in a very, very reliable fashion, there are X Bitcoins in this vault, when in fact, the euro has nothing to, behind it. Most of what it has is bonds in euros. So you are accumulating euros, future euros, to say the current euros have value. That's a scheme that is very new in the history of humanity. It has started in 1971 when the largest power broker in the world had no other choice than to do that. But does it really work when everybody does that, when they do it without any limitation? Remember that when the Fed decided to remove the gold standard, they said it was temporary. I don't know whether you're aware of that. Forever, it was temporary.
Yeah, there's always a temporary or transitory or
temporary. For the time being, we are going to slightly suspend the convertibility of the dollar until we redo it again. Today, the parity between the dollar and the gold would not be exactly the same that in 1971.
Once you realize this, and I think this is the moment that people need to understand the importance of what happened in 1971 from the unpegging.
In 1971, it was not something extremely important. It's a bad habit. The first cigarette you smoke is not deadly. It's not important, the first cigarette you smoke, if you're able to stop it after 10 minutes and it was your last one. If your first one was your last one, it's not very, very dangerous. So in 1971, maybe they had no choice and they had to take this decision. The mistake was that the temporary has been lasting now more than 50 years. And the consequence of this small mistake, it's like morphine. If you're very, very, if you have a pain in your leg, you can take some morphine. But if my father is surgeon and my mother is anesthesiologist, and I usually say the central banker is the anesthesiologist. But when you're under morphine, you think, in fact, I don't need the surgeon. And this is wrong. And in fact, when you keep on distributing morphine, at the end, you have not fixed the problem. You have simply delayed solution, and you think you gain time. In fact, you lose time. You end up have lost time. And when you have lost 50 years, it's more difficult to fix. And in fact, you will never fix it. The dollar and the euro are not objects that can be fixed with the current setup and the current governance and the current organization. At least this is my speculation. I'm not absolutely sure about that, but this is a bet I take.
That reminds me, what you were just saying there reminds me of, I think it was Milton Friedman. There's a clip of him saying inflation is like alcoholism. It's great in the moment.
Yeah. It's like morphine. It's like morphine.
Yeah, it's the same.
I did not know this. I have an enormous admiration for Hayek and Friedman, of course. The image is natural, so I don't know whether I read it somewhere and unconsciously I transformed it into morphine. I wrote the article about morphine about 15 years ago. So maybe, but it's so obvious. Everybody is saying that. So it's so obvious.
So obvious. Okay, I had so many more questions, but I'm just going to wrap up with this one last question.
Okay.
So actually, two quick questions. We started with think outside the box, talking about that, and Bitcoin being outside of the box when you started in 2017. Is Bitcoin now inside the box?
Yeah. So we have changed a little bit. So we launched in 2017 the first open-ended fund invested in Bitcoin, which was a passive fund. And we took the decision to transform our passive fund into an enhanced fund. So today, we don't want to only store Bitcoin. We want to store Bitcoin with a Bitcoin yield. We want to increase the amount of Bitcoins per share in our fund. And this is something that we have implemented. So I don't have the figures in mind, but we have implemented that two ways. So I think that our Bitcoin yield for year to date is in one of our implementation is 47%. I think the Bitcoin yield in the other one is something like slightly less than 200%. It's a fund which is traded, has a daily NAV. It's a fund which is only offered to professional investors. So it's not regulated in any country of the world. So it's only for professionals. But we have transformed our fund that was designed originally for professional investors to have a passive, exposure to Bitcoin. Now it's becoming an active exposure to Bitcoin. And the goal of our fund is to provide them with more and more Bitcoins a share.
Amazing. Well, let's wrap up there. It's been such a good episode. Thank you.
Thank you very
much. Thank you so much for coming on.
Thank you. Bye-bye. Thank you, Jordan.